Hi, and welcome back to The Introvert Guy. In today's episode, I want to discuss a pressing issue affecting the Russian economy, particularly the major problems emerging related to currency, specifically involving India and China refusing to engage in business transactions using Russian rubles. If you've been following our channel, you're likely aware that since sanctions were imposed on Russia, it has increased its trade volume with China and India, making them its primary trading partners for its most valuable commodity, oil. In theory, Russia seems to have circumvented the severe impacts of the sanctions by finding new buyers for its products. However, a critical challenge persists. Russia, despite being a net exporter of commodities like oil, gas, coal, and wheat, still heavily relies on imports. This reliance necessitates trade with various countries worldwide, requiring a universally accepted currency. Unfortunately, from Russia's standpoint, nobody is willing to engage in transactions using Russian rubles. We've extensively discussed the devaluation of the ruble on this channel over the past year. While it experienced a recent rebound due to Russia enforcing additional capital controls to compel its exporters to deal solely in rubles, the ruble remains significantly weaker against the US dollar year on year. However, the focus today is on how the ruble's value is becoming almost inconsequential due to Russia accumulating vast quantities of Indian rupees and Chinese yuan from its trades with India and China. These currencies are not widely accepted globally, causing Russia considerable difficulty in converting these sales into usable cash. Today's video will delve into the currency issues Russia faces, exploring the surge in trade volume with India and China. We'll analyze the exchange rates between the Chinese yuan, Indian rupee, and the Russian ruble. Spoiler alert, the ruble has devalued against both currencies. Additionally, we'll discuss the impact of the oil price cap and the actions taken by the USA against tanker companies transporting Russian oil. Finally, I'll conclude by discussing the implications of Russia being paid in rupees and yuan for its oil exports on the Russian economy. But before delving into that, I want to express my heartfelt gratitude to everyone supporting the Introvert Guy channel. Your contributions, whether buying me a coffee, sending YouTube super thanks, becoming a member, or a patron, mean the world to me. If you're considering supporting the channel differently, stay tuned for details on winning this little guy. Now let's jump into the pressing matters affecting one of Russia's most lucrative oil trade routes. Furthermore, Russia is encountering challenges in dealing with these accumulated Chinese yuan and Indian rupees. These currencies, though seemingly substantial on paper, pose limitations due to their restricted tradability on the global market. As a result, Russia finds itself in a predicament where it's making substantial sales but struggling to convert these sales into usable cash. This scenario contrasts sharply with Russia's economic situation before the invasion of Ukraine. The underlying issue lies in the fact that these currencies are not widely accepted beyond the realms of China and India. Consequently, Russia's capacity to conduct trade with other nations is significantly hindered. With an economy reliant on imports, Russia needs currencies like dollars and euros to facilitate these transactions, and the lack of availability of these globally accepted currencies is causing immense strain on Russia's economy. To comprehend the gravity of the situation, let's take the example of a barrel of Russian oil, currently priced at around $64 and with an exchange rate against the US dollar at approximately 89 rubles for $1. Russia is receiving roughly 460 Chinese yuan for every barrel sold to China. However, comparing this to 12 months ago, when the exchange rate was 8.4 rubles to 1 yuan, Russia would have received around 679 yuan per barrel. This represents a staggering 32% decrease in earnings for Russia on the same barrel of oil over the past year due to ruble devaluation. A similar situation emerges with Indian rupees. 12 months ago, the Russian ruble was stronger than the Indian rupee. However, today, the rupee is trading at around 1.07 rubles, marking a 45% devaluation of the ruble against the Indian currency. For a barrel of oil priced at 5,700 rubles today, Russia would receive approximately 5,300 Indian rupees. Yet, 12 months ago, that same barrel would have brought in over 7,700 rupees. This sharp decline significantly reduces Russia's purchasing power in global markets. Additionally, since December 2022, when the West imposed a $60 per barrel cap on Russian oil sales, the U.S. has sanctioned tanker companies transporting Russian oil priced above this cap. These measures aimed at tightening the screws on Moscow's war in Ukraine have led to limitations in Russia's shipping methods and increased expenses for non-Western maritime services. In conclusion, while Russia appears to be achieving substantial sales figures, the reality of being paid in less valuable and less tradable currencies creates a stark economic challenge. Russia's dependence on a broader acceptance of currencies beyond yuan and rupees is vital for sustaining its economy. The current situation, wherein Russia accumulates yuan and rupees but struggles to convert them into usable cash for global trade, points toward more profound economic hurdles for the country in the coming months.